we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines at this hour. Markets continue to remain in a range. The Nifty trades above the 12,000 mark. IT and pharma stocks remain the top sectoral laggards. Volatile moves seen in Dr. Reddy's. The stock fell as much as 12% intraday before recovering. It, however, remains among the top index losers. Fitch Ratings downgrades ICICI Bank and Axis Bank to BB plus from BBB negative, citing operational challenges in India's banking environment. While ICICI trades with marginal losses, Axis Bank recovers from day's low and trades in the green. And Infosys co-founder and chairman Nandan Nilekani is unfazed by Donald Trump's decision to revoke India's developing nation status, says Indian tech firms are creating enough jobs in the US. That's a Bloomberg exclusive. Good afternoon, Neeraj. Well, clear sign of profit booking has kicked in after yesterday's rally, but index is still managing to hold above that mark of 12,050.
Yeah, and interestingly, we thought that banks would lead the charge down today. Maybe the street would be worried about Axis and ICICI Bank. That's not happening because the Nifty Bank is doing rather well for itself. So the Nifty 50 down about 0.25%. The banks are up about 0.25%. The mid caps and the small caps, after a really good move in the last few days, have been a bit ho-hum. So in today's session too, very, very flat trade. And the market breadth after yesterday's some amount of pullback in today's session started off very well, but midway through trade had a bit of a crisscross and now in favor of the declines. So the advances are lower than what the declines are. But let's get the heat map up on the screen very quickly and talk about what's happening to the Nifty 50 names first. Well, it's almost similar to what it was at the start of the trading day, just that the quantum of green has increased a little bit. Bharti Infra, NTPC, no specific reasons, but NTPC is up about a couple of percentage points. Yes, Bank, and the big surprise is Axis Bank. Well, maybe not a surprise, but it's an interesting move that Axis Bank has not corrected at all in the session today. ICICI Bank corrects ever so marginally after the Fitch downgrade, but Axis Bank not too much. Bajaj Finance at 3,541. This is northwards of 10 times book now for Bajaj Finance. What is not doing well, and that includes a Z, which is down about 3.5. Dr. Reddy's and Hero MotoCorp are amongst the other stocks, and some pain for some of the IT companies in the session today after the currency strengthening. So HCL Tech as well as Infosys are down in the red. Just very quickly, if we can get the currency once up on the screen, because the rupee started off fairly strong, was almost breaking ground and entering into the territory above 69, and now intraday has just slipped a little bit, 69.28. So from the highs of the day, the currency slipped a bit. Very quickly, the mid caps and the small caps, just bring them up on the screen and see what the indices and specific pockets have done. So some PSU banks, you will find a flavor there out here of financial names. IDBI Bank, REC, PNB Housing Finance, so PSU financials have done well. Manappuram Finance 3.5% higher. Some strength in Balkrishna Industries. What's not done well is Indian Bank. That's one of the few which hasn't. Dilip Buildcon will be speaking to the management in a bit, down about 4%, and Dish TV another 3.5% after Z has done what it has done. And the mid cap and the small cap index will come up on your screen. Again, a few stocks moving up, but the common flavor out there is again some PSU banks. So OBC, Syndicate Bank, etc. doing okay. What's not doing well? IRB Infra, and I think anything related to infrastructure in state of Andhra Pradesh, not saying IRB, but anything related to that pocket would be under a bit of pressure because of the news flow. India Cements is down about 4.5% as well, and Lemon Trees amongst other names which has corrected. What about the more liquid space though, Navneet?
Well, Neeraj, we did highlight that the markets were headed into an overbought zone, and that was clearly being indicated by the Nifty PCR yesterday, which was somewhere about 1.75. With the correction in profit booking that we've seen, I think the PCR now has also fallen to levels of 1.75. 1.5 thereabouts. But Nifty futures are currently trading with a premium of 22 points. Let me tell you, ahead of a crucial event lined up on Thursday, there is no major build-up in terms of open interest. It's just about flat, up about 1.5%. Bank Nifty, which has been in focus, that's holding about. In fact, it is still trading with some bit of gains, and 7.5% higher seen when it comes to the OI build-up. A lot of PSU banking stocks are the ones which are in focus in today's trading session. How should one position themselves? What's the range that one can watch out now from here about? If you look at the options data, the range that we're getting is very, very narrow. The maximum open interest on the put side is at the 12,000 strike, and on the call side now it is at the 12,100, followed by the 12,200 strike. Remember, in yesterday's trade we did touch the 12,100 mark, and for the day I believe for the upside one should watch out for that mark. In today's trade specifically now, yesterday was a day of put writing when the Nifty PCR went up. Today we've seen strikes like 12,000 and 12,050 witnessing OI addition, and whereas on the call side you've got the 12,200 and the 100 strike where maximum OI addition so far has been seen, and the lower level put strikes are now starting to see unwinding, clearly telling you put writers could be booking profits at higher levels right now. Few stocks I want to highlight. One of them is Mindtree. The stock's trading with some bit of cuts today, but significant amount of OI build-up has been seen, 55%, telling you there are some fresh short positions being taken here. I think the stock's also recovered from the day's low. Manappuram Finance, what a run this stock has had. In fact, the stock's up 50% this year. It's an outperformer since the time the numbers have come in. The stock's up 15%. It's trading around its all-time high levels, and every time you look at the stock future data, it tells you traders are only betting on the long side with regard to this counter. The Q4 numbers were also good. Healthy AUM book was reported, and India Cement, from the cement pack, the stock slipped below the 50 DMA in today's session. Look at the stock, it's trading with cuts of nearly 5%, and on the future side, OI build-up of nearly 20-21% is there, which is telling you there are fresh short positions being taken in India Cements. In fact, there were also reports indicating that cement prices have been cut in the southern region. Probably the fall today could be on back of that. But net, Neeraj, the correction that one has seen today, I think it's mostly a profit booking on the index.
Yeah, seems to be the case. The important thing, though, that almost everybody seems to be saying is that the market is being driven by passive ETF flows. Now, is that true? Even if it's true, is that the principal reason? And what is it that the global money bags are talking about India after such an important verdict has come out? Viewers would remember a few weeks ago, Karun, Marwah of Motilal Oswal Financial Services had joined in to speak about that behavior ahead of the event. Now we're getting him after the event to talk about the same thing. Karun, good having you. Thanks much for taking the time out.
Hi Neeraj, hi Navni. Thank you.
I don't know if you got a chance to travel after the event or no, but I'm sure you've gotten a chance to talk to some of the large money managers.
Yeah.
What is the common thread, if there is one, that is coming out of these conversations?
Haven't been on the road after this, Neeraj. We've been busy pretty much out here. But yes, I have been speaking to investors. Thank you for having me over here. I think a common linkage that you're seeing is I think people were seeing this as an important event, right, to, let's say, lay out the direction for us. For us, as we see the election and having been speaking to people for many, many years, I think the verdict is extremely transformational in view of how investors will look at India. I think, when you're investing, you're really looking for a few key ingredients. You're looking for stability, continuity. More importantly, you're looking for experience, right? And last is vision. If you see every signal that this mandate has given for an investor is these four attributes. Here is an experienced government that's shown you what they've done for the last 5 years, and now they're signaling what their plans are for the future. But more importantly, for a foreign investor, looking at a stability, continuity of the passage that you had in the past will turn a lot of eyeballs towards India. For many fence sitters, they're going to look at this asset class a lot more seriously than I would stick my neck out and say that they have seen in the last 15 to 20 years.
Now, are people already talking about that to you? I mean, I don't know if you got a chance to talk to fence sitters, but even if you got a chance to speak to people who are already invested, are they talking about enhancing their investments?
Absolutely. Look, I'm not saying the investors that we speak to are even driven to say that, okay, with the re-election of a progressive government, we're going to do more. But you've got to just see it from the window of, what was holding them back. And, we don't stop to think about, okay, it's been a great opportunity, has size, has growth, but why was capital not coming in? And I think, Neeraj, even last time I mentioned, I'm not talking about momentum capital. India needs productivity. Productivity is going to come from sticky capital. And I mentioned this, we are still at the tip of the iceberg as far as long-term sticky capital from pension funds and endowments come. It's coming sporadically. This event changed the way they have been investing and how much they're going to enhance and invest. Because look at what the mandate signals, right? It's saying that the electorate is saying that I am here for productivity, right? I'm waiting for capital to go after productive assets.
Yeah, no, I get the point. Sorry, Karun, and I'm sure Navneet has more questions, but okay, and we'll get into that too. But let's say this is the message that you, as an India representative, would be telling some of your key clients about the merits of investing because of the mandate. I was wondering if large sticky money told you ahead of the event that they would wait for a positive mandate to come out and invest fresh money, and if they are now saying that, okay, let's explore these conversations further and see whether we want to invest or not. Is that happening?
Yes.
Was the mandate holding them back?
Yes, the answer is clearly yes. To the size that they wanted to get in, becomes a lot more easier for them to look at a longer runway than they saw in the past. So somebody, if they had 1% towards India, might say, okay, am I able to re-up that to 1.5 or 2%? And that's very sizable, mind you, for the size that they manage.
Okay.
Okay, Karun, the interaction that we've had with a lot of FIs post the verdict, and that's done now. The verdict clearly means now for the markets there will be continuity going ahead with regard to policies. There were a lot of measures taken in Modi 1.0, but tell us, going ahead now, what sort of concerns are being highlighted when it comes to the Indian market? Because there is liquidity crunch, and I remember one of the FI interview, they said the devil lies in the details. There is still liquidity crunch. The GDP numbers, if you were to go by the recent ones, it's the lowest number that one has seen in the last 5 years. So do these factors come into play before putting fresh money now into play?
Absolutely. I wouldn't be denying, I would be wrong in saying that there don't exist risks or there aren't impediments, right? But again, the pool of capital that me, my team and our company goes after the long-term sticky. So I'll address it from that prism, right? I think the larger complaint people have often had is the sectors that we can invest in India that show us a long-term runway are very limited. You know, it comes down to the basket of consumption, comes down to the banking and financial services space. And, you know, which is why you'll always see lofty valuations to these two large constructs, and large amount of foreign capital has tend to go behind this. So I think investors continue to see that as an impediment to the entry over here, but they also see this event as a signal that, okay, you can probably have a large, more broad-based growth after this. You can do more justice to your 5,000 odd stocks that you have and go beyond an investable universe of 80, 90 or 100 stocks that everybody gets behind from foreign investors. So I think a mandate like this, the reason I get back to this is perhaps going to encourage private investments. The moment private investments come in, you will come to the 4 sectors where foreign investors have been waiting to get in, and, you know, might see productivity there and want to take a position as well. But the immediate term risk and impediment to people is about, it's back to the same old stocks, same old sectors, and how much are we going to continue to pay for that? So valuation will be an impediment in the short term.
Okay, and that's precisely, I think everybody's been talking about
Absolutely.
it. If one were to talk about the key reforms which from the FI community which they were watching out, I think one was GST implementation in IBC. Anything specific now, a new reform that they'll be watching out from Modi 2.0?
In my view, it would be land and labor. I think unless you're going to try to make a shift or fill the space that the trade war is giving us an opportunity, right, to get into manufacturing, but unfortunately it's really Vietnam and Indonesia that are capitalizing more on it than India is, right? But labor and land reforms stay the impediment to growing into a larger base manufacturing economy. I think they would love to see something in that realm. They would love to see more traction on the insolvency and banking code. I think it's, in my view, been the largest, most impactful reform of the last 5 years, way beyond demonetization GST. That's my personal opinion. I think they want to see a lot more assets get under the hammer and see assets get back to being productive. So they're seeing more on the IBC code. It's not just it's launched, it's about they want to see it successful. If you say 270 days, we would like to see it done within 270 days without exceptions.
So what's next for the large sticky foreign money to come in? The election mandate is done. If you're talking about whether, I mean, are you saying that the money will come in now if indeed this 2 or 3 of these things happen, or do you reckon that money will start flowing in? Part 2 of my question will also be the recent spate of flows that have come in, either post-exit polls or barring the first 10 days of May, was it ETF passive money or was it something else? What is your sense?
I think it's been a mix of both. It's obviously more ETF money. Nevertheless, I mean, to answer your first question, I don't think there's another event or another reason or rationale to justify making an entry now. I'm very, very clear with this, and this is what I tell my investors. Look, India has outperformed every single EM and the EM basket over 1, 3, 5, 7, 10. We missed the picture. And this has come about when you didn't have the best going on. Start to think of the larger picture of, with most things in place, what it can be in the future. If you're going to continue to desist from getting into India simply on a valuation perspective, I think you're going to continue to miss some piece of the opportunity. I think the answer lies in seeing it beyond the next 2-3 years, correct?
And so, people are buying that argument? I'm just trying to think.
I'm sorry?
Are people buying that argument? I'm not saying it's not a valid argument. I'm just trying to think that are people buying that argument with a 3-year perspective, let me not miss the bus? Or are people saying that, sky high valuations never stay. So we want to get into India, but at 22, 23 times, 26 times trailing or 20 times current, let's wait for a pullback. What are your clients saying?
I think investors have a 5 to 7 year perspective and more. I don't think they're timing it. I don't think they're concerned about. Yes, they absolutely will, right? Look at it. They have to meet their asset liability mismatches. It's not going to come by trying to time when you get into a high growth economy like us. So somebody with a 5-year plus perspective, I do not think timing is their concern. And I can already see it with clients we meet. They've started to put their money in, pre-election and post.
Okay. And Karun, the interesting thing that I remember from our last conversation is that the set of clients that you talk to, a large portion of them are from the European region as well. We usually hear from people in the US region, Asia, through the Bloomberg network, a lot of people come in. We don't get a sense of what the Europeans are doing. Are they talking of really large money starting to come in over the next 12 months?
Actually, Europe, Neeraj, is something we're starting to work on. We've done a lot of North American capital now, right? So it's not the other way around. That said, our initial efforts towards the European region is still trying to discern what kind of periods people want to invest in. They're grappling with enough locally to be extremely distracted about.
Okay, fair call.
Okay, just a last question from my side. Within the EM basket, and of course China is the heartbeat when it comes to the emerging markets, but with the ongoing trade war issues between US and China, do you see any possibility of money reallocation within that EM basket? Do you also feel India could benefit out of it? Because now the reports are indicating Vietnam is the country which will benefit the most.
Yeah, but Vietnam doesn't have the size that India would command of China, Brazil.
Of course.
Yes, my answer is clearly yes, right? You just step back and say, where really do you, as a global investor, put your capital? I mean, one is the trade war, US and China. Somebody's just popped the party for China currently, right? I mean, are they large enough to come out of it? Yes, they will. But, for immediate investors, it's discerning. You look at Brazil, right? After Bolsonaro, it started to move up, and early signs yesterday in the paper about, recession probably hitting them late into this year. I do not know how many other single country large EM opportunities that exist outside the United States that can absorb the kind of capital that we're talking about. So my short answer to you, yes, absolutely so. I mean, impacts of the trade wars or slowdowns in other large economies is bound to benefit India.
No, so are you saying that clients are now starting to make, large clients are looking at India as an individual market and not necessarily as a part of the EM basket?
Yes, they've been doing so for some period of time. I think an event like this is going to make it even larger and larger, And there are some that are taking an unorthodox view to India. I speak to a couple of investors that have a far greater weightage than the others, and others are, part of the pack. And I think my message to investors is, I think your call now is not about India, where in India and what in India. It's about your asset allocation, and the magnitude of your asset allocation decision is going to be the harder one for you to take, and the more important one for you to take now.
Okay, Karun, I think we'll leave it at that note. Thanks a lot for joining and taking us through your view as to what the FI community... You have any more questions?
No, that's fine.
Sorry.
I think he's answered almost everything that we wanted to know.
Okay. Pleasure to have you here in the studios.
Thank you. Thank you.
Okay, that's a word coming in from Karun Marwah of Motilal, interacting with a lot of FIs. And remember, we've been getting a lot of FI flows into the market, especially after May 23rd, when we did get that historic verdict. Markets are right now at 12,047, so 40 points slower. Bank Nifty is the one which has seen some bit of outperformance, though slight. Remember, banking stocks will be in focus ahead of the key event lined up day after tomorrow in the form of RBI policy. But let's talk about individual pockets which could be in focus after BJP in its manifesto had promised to double the length of highways by 2022. To undertake the task, Nitin Gadkari is back as the Minister for Highways and Transportation. But are the road construction companies ready to meet the challenge? Let's put the question to Rohan Suryavanshi of Dilip Buildcon, who joins us now on the phone line. Hi Rohan, good afternoon. Thanks a lot for joining us once again on Bloomberg Quint. Well, the elections are out of the way, and I presume there were a lot of approvals which were pending due to the election time. Tell us what's the ground situation indicating right now. Are you getting the appointed dates now from NHAI which were pending in the last quarter?
Hi, Navneet. First of all, thank you for having me on your show. You're very right. A lot of approvals were pending because the government had gone into election mode. Now we are in the process of receiving a lot of them. In fact, just yesterday we announced one of the appointed dates that we got from our HAM projects. We're expecting 3 more to come within a week, which would take out of our 12 HAM projects, which would mean that 9 of them would have received appointed dates within this week. And the 3 more which are left, we're expecting it to come, 1 to come in the next month, and then 2 more to come after that.
Okay, and Rohan, is the financing in place for all these projects? When you get the appointed date, are you ready to go with the execution?
Absolutely. So the appointed date will only come when you fulfill all your conditions precedents, which is basically the financial closure. And the government fulfills their conditions precedents, which involves land and some other clearances. So all...
Rohan, can you hear us?
Appointed date. So the funding, the equity and the debt all has been tied up, and we were only awaiting the appointed date for these projects.
Okay, Rohan, just one question. You, I presume, would also have some projects in the geography of Telangana. Would any of your projects be a part of those that could possibly face cancellation issues due to the recent news flow surrounding Jagan Reddy's thoughts on infrastructure projects awarded before his tenure?
So, as a company, our policy is to focus on national government orders, and our 85% of order book is from the national government. Even right now, we don't have, even the projects that we have in Telangana are all national government orders. And this order is meant for state government orders, so it does not impact us in any manner. So we are okay. We are actually now waiting the order inflow to start from the national government again, because there is about 1 lakh crore of orders which the government had floated before elections, but they had not been able to give because of the code of conduct. So now, given that, like you rightly pointed out earlier, so that Mr. Gadkari back in the saddle, we're expecting these orders to flow at a faster pace, and we should see a flood of orders coming in the next 2 quarters.
Rohan, what sort of opportunity lies for a company like yours, as BJP manifesto spoke about significant investment into the infrastructure space? What percentage of your order book comes from the government orders?
So obviously the government has clearly said what is its intent when it talks about rupee 100 trillion investment into the infrastructure sector. We are also very excited about the opportunity that will come in. And the government will push on this because of the push on economy that they want to do, the creation of jobs, all those things which are high on the government priority list. All of that will happen through infrastructure spending. So you're creating an asset and you're also impacting the GDP of the nation while doing so. So we're expecting it to happen. We are expecting orders to come in roads. We're expecting orders to come in mining. We're expecting orders to happen in irrigation. Inland waterways is a new department that we've created because river linking has been something that has been spoken about for a while, and we're expecting orders to come in that sector in a big way. We're also excited about opportunity coming in the railway sector. And hence, recently we've had a former PMD and CEO of IRCON, who's heading our railway business now. So we see a lot of work that this government should bring out at the federal level. Besides this, because the BJP is also in power in a lot of the states, and their agenda is on infrastructure is very clear, we expect a lot of state government orders to also come in.
Right. Rohan, I'm just looking at your Q4 earnings, and they were, of course, impacted. The margins were impacted because you didn't get the appointed dates on time. Tell us what's the guidance now going ahead? What sort of margins are you looking at? What sort of growth on the top line one can expect? Because for FY19, I think the guidance that you guys had given, it came in at the lower end.
So, while I think the numbers for our Q4 were robust, but I honestly, I don't look at quarter-to-quarter numbers. We, as a company, we try, especially in the sector that we are in, we look at annual numbers, and we've done a very good growth both in top line and bottom line on an annual basis. So I would definitely that you guys should look at us in that manner. Similarly, now since you asked about FY20. We are very confident about a 15 to 20% growth in our top line and a similar kind of growth in the bottom line as well.
And to achieve that,
and you will start seeing that in the first half of the financial year. You will start seeing that robust growth that I'm talking about, because appointed dates are coming in. Already the order book is very robust, very strong. So only thing that is needed, and we're very well prepared at all the project sites. So the only thing is needed is appointed dates coming through.
Achieve that 15-20% growth on the top line, Rohan, what sort of new orders will you'll have to bag in FY20?
FY20, we're targeting somewhere about 12,000 crore plus of orders, and we're fairly confident it will come through all the sectors that we're already in. But the majority of this should come from the road sector, as has been our order book. About 80% is from road sector. So we're expecting it to be in a similar range in this financial year as well.
Rohan, it's a net debt company, and we've seen the balance sheet improving. You guys have managed to bring down the debt to equity ratio, I guess, from 1.16 to 1.06 by the end of FY19. You've also given a guidance you plan to bring it down to below that level of 1 to 0.8. How do you plan to do that in FY20? Will you be generating free cash reserves to pay the debt, or will you be monetizing assets in order to reduce the debt?
So the guidance that we've given to you is based on, number one, we're not investing in any additional equipment this financial year. In the last 5 years, we've invested almost close to 2,200 crores of new equipment. Besides that, we're also investing in PPP projects. Now this year, we are not investing any new equipment. So that the equipment that we already have, that for this year is also going to be paid down. So on our absolute debt level number, you will see reduction happening in this financial year as well. And which is why we've spoken about that debt equity figure to come close to 0.8. Besides this, the asset monetization plan, we've always spoken that we are an EPC company, and we only do PPP projects because the government of India awards half of its portfolio through PPP. So we see it as an EPC work for us, and we try to monetize it as soon as possible. So that we can then focus on the next set of projects. So that has always been our strategy, and we will continue to that strategy going forward as well.
Okay, Rohan, before we wrap up, I repeat, you as a company do not have any project in the Telangana region which is liable to get cancelled because of the new government having a change of decisions.
Absolutely, yeah, you're very right. We have no exposure there in Andhra Pradesh.
Okay.
Any state government projects there.
Fair call. I'm glad you clarified that. A lot of stocks are coming under the hammer because of that, Rohan. Important to have that conversation clear. But thanks so much for taking the time out and speaking to us today.
I appreciate it. Thank you very much.
That's Dilip Buildcon. The stocks, though, down about 5%. A lot of other companies have faced some stress today because of talks of how some of the projects that they got earlier might have gotten cancelled or will get cancelled. Therefore, some of the infrastructure stocks will be in focus. Just maybe NCC is the one name that we should pull up yet again. Remember, had a slam dunk in Friday's session, then has had a steady move the last couple of days, but just refusing to pick up any kind of steam, NCC, the last 3 sessions. Anyways, moving on, let's put a spotlight on United Spirits. The company held an analyst meet recently where it reiterated its double-digit medium-term growth target. The stock's about 2.5% higher, trading at days highs. Agam Vakil, who tracks this closely, is here to put things into perspective. Agam, the spotlight on United Spirits.
Yes, well, you've already spoken about the kind of strength that we're seeing, but it did start off the day on a shaky foundation. And since then, we've seen it rise. It's up 2.5%. But let's not forget the valuations at which this particular stock is trading at, and which makes it extremely risky, which brings me to the analyst ratings on as far as Bloomberg is concerned. And as you can see, we don't have a majority in terms of buys. Only 41% analysts who track United Spirits have a buy on it. Well, more or less equal number of holds and sells. So a lot of analysts are circumspect. Even if you look at the return potential from current market levels based on the average target, which stands at 587, it only indicates a 3% upside from now, which means that more or less this particular stock is fully priced in. Now the question is, what went down as far as the analyst meet was concerned, and we have some very, very mixed cues coming in. So firstly, when it comes to CLSA, well, they maintain their sell rating on this particular stock with a price target of 450. They're saying that while the management is confident of the double-digit growth, there are still a lot of challenges with respect to valuations, and there could be some further upside on cost savings, but that is going to remain a challenge, at least in the near term, given the fact that there are also a lot of input cost pressures on that. HDFC Securities, on the other hand, is a little more positive. They do have a buy with the price target of 650, and they are again, basically, they have this positive stance on the back of the expectation of double-digit growth and an improvement in margins. And given the fact that we've seen price hikes over the last 2 to 3 months, that is also something that could lead to further growth. However, it is the valuations, they remain extremely heady, especially given that the consumption environment as a whole has seen some sort of a slowdown, which may have a bearing on the alcohol industry as well. And that's the reason why at least some of the analysts on the street are a little bit circumspect, and which is also the reason why we don't have too much of an upside as far as United Spirits is concerned at this point in time.
All right, Agam, thanks a lot for bringing those details with regard to United Spirits. The stocks inched higher in today's session, though analyst community may not be too gung-ho. The valuations, as Agam was highlighting, do appear to be on the higher side. In fact, it trades somewhere about 45 to 46 times FY20 earnings. The stock's right now sitting with gains of about 570. Okay, it's time to bring in our technical expert on the show and get you some levels to watch out for on the index. Amar Singh of Angel Broking joins us on the show. Hi Amar, good afternoon. 12,050, there is some profit booking which has come in today's session. Are you using these dips to create fresh positions on the upside? Or also tell us what sort of levels one should now watch out on the index?
Yeah, a very good afternoon. What we've been witnessing in the index primarily is that for the last few trading sessions, the index has been trading lower, and then towards the end of the day, it has bounced back for the last almost 4-5 trading sessions. And also the short term, if you look at the short term trend, that still remains extremely positive and strong. So the bullish momentum is there. However, on the hourly charts, what we are seeing is that the high that was made yesterday on the index, so now that should act as an immediate level of resistance, that is 12,103. Today it had made a high of 12,095, and then it has corrected marginally from there and trading sideways for the day. But what we are seeing is that now 12,000, 12,040, now that's acting as a support level, and on the upside, so it's a very narrow range for the index, primarily Nifty, which I'm talking about. But the trend still remains positive, so dips can be used as buying opportunity. Crucial support is seen somewhere around, I would say 11,950, 1200, 12,000 levels. That's a crucial support zone. Whereas on the upside, again, it's going to be 12,100, 120. That's an immediate level of resistance. But until the time we don't see a trend change, ideally it would be good to be on the long side of the market.
Okay. That's the level to watch out on the index. 11,990 is where Amar is saying there could be some support. And remember, we've been highlighting maximum open interest on the put side is at the 12,000 put as of now. And in today's session, actually some profit booking has definitely come in, because you have seen unwinding for put strikes like 11,900 to about 11,800, telling you put writers could be booking profit at higher levels. But Amar, in terms of individual stocks, what are the calls you have for us this afternoon?
I would say the first one to look at is Axis Bank. If you look at Axis Bank, what we are seeing is that the stock has traded firm, and even today the stock has rallied significantly, and it's trading positive. Technically, if you look at this Axis Bank, it continues to be extremely strong across the long-term as well as the short-term trend, and the best part is that the short-term trend, in spite of being in overbought territory for almost 10 to 12 trading sessions, it has been inching higher, and today again it has broken out of a consolidation zone. So we'll have to watch out. If it sustains above 815, 820 levels, then it could rally towards 840, 845 levels. And on the downside, it has got good support. So Axis Bank is one stock one can look at. So any pullback in the stock towards 815, 818 levels can be used as a buying opportunity, with a stop loss of 801 and a target of 848 on the upside. And the second stock to look at is Adani Ports. If you look at Adani Ports, what we are seeing here is that again this stock continues to be very positive on the short term as well as the long term charts, and it did witness a major rally towards 430 levels and then corrected all the way towards 400, but again it's right now trading around 424, and technically the stock continues to remain positive. So any pullback towards 420 levels, 423 levels can be used to initiate a long position, with a stop loss of 406 and a target of 424 on the upside.
Okay, so do watch out for some of those trading ideas as well. Let's get a fundamental perspective going. Avinash Gorakshakar of Joindre Capital Services with us on the show. Avinash, good having you. Thanks much for joining in. What was your thought in the morning when you saw the Fitch downgrade news? And the reaction has been pretty decent. It's not any kind of major downtick. In fact, Axis Bank is trading in the green.
No, Neeraj, I don't think this is going to have a significant impact on the earnings part. I think clearly, our sense is that this could be maybe a short-term sentiment kind of, negative. But over the longer term, I think the kind of commentary we have got from the Axis management, I think clearly post the Q4 numbers, the new managing director has clearly hinted that over the next 2 years, they are looking at a ROE of in excess of 18%, asset quality to improve. So I would believe that, despite the fact that credit rating agencies may have downgraded, Axis Bank for a particular reason, the balance sheet is going to get much better. And I think, hopefully if this budget is going to be an infra-led budget, you're going to see a lot of corporate capex, moving up. And this corporate capex is going to be funded by, stronger banks. So here I think Axis Bank is going to play a big role. So I think this downgrade news, market had, not discounted it that badly. And I don't think, the stock has also given up any gain since morning. So all said and done, I think the longer term picture, Neeraj, looks pretty strong. The corporate banks are going to be the flavor for the current year.
Okay. The other set of stocks, Avinash, which seem to be doing really well for themselves, and I know you covered 2 or 3 of those. I'm just picking them up on the list of stocks which are trading at 52-week highs or life highs. The DCB Bank at 236, packing a serious punch. Deepak Nitrite at 326, packing a serious punch for itself. And Bajaj Finance at 3,500 and above.
I think Bajaj Finance has, hit a new high, if I'm not wrong.
All of them are at new highs today.
So I think, it's going to be quality all the way. And I think as far as DCB Bank is concerned, my sense is I think the kind of numbers they presented post Q4 numbers, I think asset quality and the loan book growth and the NIMs are going to get better. And I think we have seen this trend in the smaller banks. Smaller banks have done pretty well. So our sense is that, you're going to see a lot of re-rating in some of these smaller banks which are managed well, and where hopefully we could see incremental, kind of asset quality growth getting better over the next, say, 2 to 3 quarters. Our sense is that, typically wherever the business model is strong, coming to, stocks like Deepak Nitrite, Neeraj, I think it's a clear case of operating leverage. Phenol and acetone are import substitute products. And I think the management is clearly hinted in the Q4 conference call that, they would be operating these plants fully for the year financial year FY20. So you're going to see almost top line doubling, profitability moving up. So I think this is getting factored into the prices. And I think despite the fact that, the China factor is quite uncertain, I would believe that, there's a good amount of money to be made even at these levels.
Okay, Deepak Nitrite sitting at day's high right now with gains of about 2%. The other stock which is doing pretty well is Tata Global Beverages. Pull up that one. In fact, since the morning session, there is some buying which has emerged here and it's been building on to those gains, though currently seems to be off the day's high, but still sitting with significant amount of gains of about 4.3%. Avinash, the stock after the deal was announced where the consumer business of Tata Chemical will be merged with Tata Global Beverages, we saw a huge rally in both these two stocks, and valuations could be one thing, but this is now emerging out to be the FMCG play from the Tata Group.
Exactly.
How should one play this?
No, I think, Navneet, if you see the earnings trajectory, Tata Global has actually disappointed investors for a long time. The transfer of business from Tata Chemicals, especially the pulses business to Tata Global, is obviously going to make the business more, consumer oriented and a B2C kind of business. Our sense is that probably, the markets are also looking at the fact that Starbucks as well as some other premium brands in the stable could possibly see a further kind of unlocking. So I think clearly over the next, say, 2 to 3 years, we could see a strong amount of growth trajectory coming in from this business. Maybe in the near term, you're not going to see earnings materializing that quickly upwards. But yes, the business model is quite remunerative, and hopefully when consumption comes back with a strong revival, I think you're going to see this business, showing a strong operating leverage in terms of margins and in terms of top line growth.
But pretty interesting though, Navneet, bringing it up. Just look at, I think when the deal was announced, the stock was at 200. If you can pull up the last 1 month chart, and I think this deal with Tata Chemicals got announced somewhere around that.
Around 200 odd.
Yeah, it was at 200 odd. It's now at 255. So even if you thought that the deal was good for Tata Global, which optically it looked like, even if you bought it after the deal was announced, the stock was still trading at 200. It's still about 25% in the money for a stock which is usually rather sluggish in trade. So quite remarkable a move that Tata Global Beverages has made, Navneet.
Yeah, in fact, alongside that, I think Tata Chemical has also seen significant amount of gains. Post the deal, I think the street gave thumbs up to both these two counters, though there were talks that Tata Chemical may not benefit too much out of the deal. But I guess Tata Chemical, correct me if I'm wrong, Avinash, they've got some other businesses from which they would be adding some value to it if they were to monetize that.
But this would also be because of the swap, right? I mean, the swap ratio being at what it is, maybe that's led to this move as well, any case?
I think the swap ratio, and clearly the markets were clearly happy that Tata Chemicals had no business to be in a B2C business. The B2B business was a large component for them. So I think clearly, as you rightly mentioned, there are some more elements to Tata Chemicals where some more value unlocking could come in, and that's probably where the markets are looking at, because I think ideally they've got out of the urea business. Their main business is soda ash and clearly some other industrial products.
Okay, that's about some Tata Group companies. What else is doing good? Pull up V-Guard. I think that's the other stock which has gone up in trade. You've also got something like CEAT. Both these stocks are seeing gains of about 3 to 3.5%. Amar Singh, come in on the charts on stocks like CEAT, which is up about 3% in trade. Should one take a position here?
Yeah, looking at CEAT, I would say the stock seems to have formed a bottom. Because if you look at this stock on the daily charts, it did make a bottom around 935 odd levels, 17th May, and it has rallied from there. So what we're seeing on the charts is that there is some sort of bullish divergence. However, if you look at the long-term charts, I would say clearly it shows that upside towards 1040, 1050, that's a zone of resistance, because if that is not taken out, then the stock could go in for some consolidation. But yes, it seems that the worst is over for the stock, and the stock is likely to hold the recent bottom which it had made of 935 levels.
Okay, the other tire makers, I think Balkrishna Industries is also sitting with some amount of gains, and there was some report which came in from Citi today highlighting that how Balkrishna can outperform the industry growth for FY20 volume growth guidance for Balkrishna, which is at 3 to 5% versus negative 15 to 20% target, which is there for the entire tire industry, and that too is sitting with gains of about 2%. Avinash, any thoughts on the tire makers?
My guess is, I think, tire companies could possibly show a softer set of numbers, at least for the next 1 or 2 quarters. I would believe that, commercial vehicle volume growth, two-wheeler volume growth, as well as passenger OEM sales have been affected. So I think you're going to see some amount of pressure on top line. And obviously, the good part is crude prices have softened. So on the raw material side, there is some respite. Our sense is that, Navneet, from the second half of FY20, hopefully when the volume growth from most of the automobile majors picks up, I think that is the time, probably you could see some revival in these tire companies. But at least for the near term, it's going to be a challenging task. Volume is a very important ingredient for them. And I think if at all, the two-wheeler and the four-wheeler automobile makers show a slowdown in OEM sales, then it's going to impact, their top line as well as profitability, at least in the near term.
How should one play this now with correction of crude prices?
I think the larger players, like maybe an Apollo Tyre or maybe a Seat, which have got a presence across all the four verticals, I think could be a decent choice. And considering the fact that, most of these players have got large capacities, Seat is now expanding into the industrial category, what, Balkrishna operates. So I think clearly somebody who's got a large capacity and plus where possibly, volume growth can kick in, hopefully once the revival starts, would be better bets. I think something like even a JK Tyre, which is a smaller player, but which has been hammered down quite badly, could also be a good bet. But I think it's better to play on the larger volume players where capacity is obviously ready. Once the revival happens, it could possibly be utilized better.
Avinash, which is that one company that you've recently fundamentally analyzed and might have strong conviction on, not necessarily from a perspective of a stock price appreciation in the next 3 months, but something that you believe has merit in being bought right now and held arguably for the next 2 years?
I think there are
a slightly lesser known name if you have one.
Lesser known names, in fact.
Okay, let's leave the lesser known name argument out.
I think I've got both, but I could possibly tell you, one stock which we like from the PSU space is RITES, which went public about last year. And I think, this is one PSU, Neeraj, which has got a very strong business model. It's a asset light model, largely operating on the consultancy side. Enjoys EBITDA margins of almost 40-odd%.
This is RITES, right?
RITES, and very strong dividend payout. This year, I think they had a dividend payout of almost 125-odd%. And the management call post the Q4 numbers has also been very strong. A 7,000 crore order book. And the management is hopeful that top line could possibly grow by about 20-22% over the next couple of years. So I think in terms of top line, in terms of margins, plus the kind of focus the government is wanting to give railways, I think railways is going to be a big infra opportunity. So within that, I think clearly this stock trades at a multiple of roughly more than about 11-12 times. That is 1 year forward earnings. Clearly,
is it a hope trade? I mean, in the past, 2014, I remember writing an article as well. 2014, there's a lot of conversation around how railways and defense, etc., all will get a push. The stocks have hardly done anything.
I think, Dheeraj, if you look at the pure, brick and mortar companies, I think, the ones which actually are into the capital goods segment and ones which are on the consultancy side, I think the bigger difference is, this company does not require working capital. It does not require capex. They have a cash kitty of almost 3,500 crores, virtually debt-free. And the best part is, I think clearly, they've now started looking at the export markets. Our sense is that, at this price, there's nothing to lose. I would believe that, the markets are probably looking at all the PSU companies with the same brush. So probably, if something, probably, if they do, maybe last year was very good for them. Current year also, if they do manage to maintain that growth trajectory, I think probably, one could definitely find a good amount of re-rating. It's a matter of time, and you need to give some time for these kind of companies.
Okay, that's about RISE, a fundamental pick coming in from Avinash. The stock's trading at levels of about 275. In fact, we were asking Avinash how to play the theme of correction in crude prices. And if you look at the crude prices, they've extended declines into the 5th straight session. Although they have staged a minor recovery, they are still close to bear market territory, spooked by fears of global recession. Let's speak to commodity expert Eugen Weinberg of Commerzbank, who joins us on the show now. Hi, Weinberg. Thanks a lot for joining us today on Bloomberg Quint. A sharp correction in crude prices in the last 4 to 5 sessions, nearly 13 to 15% correction has been seen. Do you see the prices now, the Brent crude prices specifically now slipping below the mark of 60 now that because of the trade war between US and China, there are fears that there could be economic slowdown in the US market, which could also impact the crude oil prices?
I think that the latter is really the reason behind the massive price slump since last week. It's the fears about the recession, about the slowdown in the growth, or probably even demand slump. I do not share this view, and that's why I wouldn't be too skeptical about the oil prices in the short, medium, or even longer term. I think at the current levels, the prices should find a support and should increase this higher since the physical market right now is in a deficit, which means that the market is lacking around 500,000 barrels per day, and it's unlikely to reverse over the coming months. So we are not sharing the view that this and the thing that the fears are probably overstated.
What's the level that you're working with in terms of in the next 1 year? What should be the range that one should watch out now when it comes to the crude prices?
Massive price fluctuations over the recent weeks. It's very difficult to talk about the ranges, but I think that the prices of above $70 are likely to become reality relatively soon once we get a confirmation from the OPEC Plus that they will be sitting, will be continuing the production cuts also in the second half of this year. And I think that the will of the OPEC and especially Saudi Arabia right now to hike the prices is quite strong, and they have the means to do it. They can provide further production cuts, and they can create this artificial scarcity, even should the growth in demand disappoint us. So I wouldn't be too concerned about the prices. I think that the prices are likely to level higher, but in a longer term, definitely we should be looking more at the other side of the ocean, at the shale oil production, and there the levels of around $60 in the longer term is probably more sustainable than $80.
The prices have been falling despite of ongoing OPEC supply cuts, which we've seen, and the reason being the war, the trade war issue between US and China could spark fears of economic slowdown. But what, according to you, going ahead would be the major triggers for a significant movement in crude oil prices?
I'm not looking for a major trigger because right now the market is driven definitely by the news, but the reality sets in at some point. So the reality is that the inventories worldwide in OECD countries are falling, given the fact that there is a scarcity on the market, there is ongoing struggle in Venezuela, there are sanctions, U.S. sanctions against Iran. All these factors will be tipping into the market reality and will be bringing the inventories further down, and at some point, and I see this point very soon, the prices will turn up higher. So also the current weakness of US dollar should be helping as well. So at the moment it's a pure fear, it's a blank fear, which has driven the prices to the current levels, and this situation is unlikely to hold for any medium term. So I do expect a return and a recovery in the oil prices relatively soon.
Okay, we'll leave it at that note. Yogesh, thanks a lot for joining us and taking us through your thoughts on the crude oil prices. It's been stable, at least in today's session, but overall, if you were to look at the prices in the last in the last 4 to 5 sessions, the Brent crude prices have come off by about 13 to 14% right now, holding about that level of 61.29 as we speak. And the markets too are sitting with cuts of about 55 points when it comes to Nifty 50, trading at levels of 12,000. I think the key today would be if the closing can be above that mark of 12,000. Throughout the session, by the way, we've defended that mark, though we could be a day's low right now, but we've defended the mark of 12,000. And the bank Nifty is also come off the day's high. It's just about trading flattish actually right now, around the levels of 31,650. Pull up Mahindra Logistics. I think there was a bulk deal which took place a while back, and the stock post that saw a blip of about 3.3 to 3.2%, almost 4.8 million shares change hands. Besides that, I just want to speak about Muthoot Finance and also Manappuram Finance and Muthoot Finance. Both these two stocks have been trading around their life highs. Post the numbers, both the stocks have seen buying interest coming by. And Avinash, Manappuram Finance has been an outperformer. I was just checking the data on Y-to-D basis. It's up 50%. Yeah. I think the FPI investment every quarter is also moving higher in this counter. The results were, of course, good, better than quarter 3. But do you see this buying continuing?
Yeah, I think within the oil, within the gold finance market, I think clearly I would believe that you could see a lot of interest coming in because primarily, the yields are significantly better. In fact, asset quality as a matter of concern is not very high considering the kind of collateral, these companies take. So clearly, I think if one were to look at the next 12 months, gold finance business should do pretty well. And I think clearly there's a lot of, asset monetization which happens on the gold side. I would believe that, especially in the rural pockets, Manappuram has got a large exposure and a large network, which should obviously help them grow, quite commendably. I think both these companies, Navneet, Muthoot as well as Manappuram should do pretty well. I think in terms of the margins and in terms of the yields and the asset quality, I think these companies definitely are far better than pure NBFCs.
Another interesting one that is, I think, kissing distance away from life highs, or is at life highs, is Havells. That has bounced back. It's about 1,000 crores away from the market capitalization of 50,000 crores, if I'm not wrong. That's pretty large for Havells. I don't think I've gotten my numbers wrong, but I think it's doing remarkably well for itself, and I think it is trading at life highs for itself. So Havells, let's pull up the 1 month chart of Havells as well and just see what it has done, and you will see that there's some gains, but yes, just about 1,000 odd crores away from 50,000 crores of market cap. First let trade view and then a fundamental view, and then we hit that break. Just very quickly, Amar Singh, Havells.
Yeah, I would say that Havells looks strong on the long-term charts. On the intermediate-term trend, that's on the weekly charts. It had earlier also made a high of 780 levels, and from there it had corrected all the way down towards 709, and it has pulled back. So this time, if it's able to breach the 780, 785 levels, then it could rally towards 815, 820 levels. But I would say that one needs to be slightly cautious on this, because on the weekly charts we are seeing bearish divergence. So what it effectively means is that higher levels we could witness profit booking, and we could see some correction in the stock. So one needs to be slightly careful in the stock.
Okay, be slightly careful, but Avinash, remarkable, right? Sylvania, a lot of problems, they got out of it.
Yeah.
Back to 50,000 crores of market cap and in life highs.
No, in fact, Neeraj, I think I would believe that in the coming 1 or 2 quarters, you're going to see a very strong bounce in the cooling business. With the heat in North India being extremely high, I think most manufacturers are very upbeat that double-digit growth could possibly be seen in most of the cooling business. And I think this is not relevant only for Havells. I think across companies which operate in this space, you're going to see a stronger bounce in the second and the third quarter. And I think that is probably the reason there's a lot of interest in these stocks, and probably you could see these improvements getting into numbers probably in the second or third quarter.
Okay, stay on, gentlemen. More to talk about. Let's get in Somit Sarkar with the chart of the day segment. Remember, Reliance Industries were the highest weightages on the index, the Nifty 50, and that holds true as far as the total debt is concerned too. Want to know why? Somit Sarkar has the answer. Somit.
So if you see India's most valued company, that is Reliance Industries, now contributes the most to Nifty 50's total debt. Reliance Industries' debt as a percentage of the total debt of Nifty 50 companies has now increased to 16.7%, as the highest level at least since the financial year 2010. And if you see compared to last year where it was around 15.2%, it has now increased to 16.7%. Now to calculate the total debt of the Nifty 50 companies, we have only considered those companies which do not belong to the financial space. So there are nearly 39 Nifty companies that belong to this, which do not belong to the banking and financial sector. And if you see among these 39 companies, Reliance Industries' debt has increased the most, and in fact it has also jumped the most in at least the last 9 years in FY19, even after the company demerged its tower and fiber assets. Now the total debt of this oil to telecom conglomerate has increased to nearly 2,72,000 crore rupees, mainly on the back of the capital expenditure done by the company. So in FY19, the company did a capital expenditure of close to 1,32,000 crore rupees, because of which the company's total debt has now increased to 2,72,000 crore rupees, and its total debt as a percentage of the total debt of Nifty 50 companies has increased to 16.7% in financial year 2019.
Okay, interesting. And there is a larger, Somit, thanks for that. There's a larger story on how the debt of Nifty 50 has gone up. If you log on to our website, bloombergquint.com, you can go and read that story as well. Pretty interesting read. Urge you to do that. Time for a short break here on Countdown. On the other side, we'll get you the Fab 4 stocks of the day. At 3:15, we get you what dealing rooms are recommending in the session, and then some closing strategies. Rahul Mohinder joins in on the other side as well.